Good morning, this is John Piper with the Wednesday video clip, and it's Wednesday the 7th of March, and we're looking here at a chart of the FTSE daily. We have a number of new subscribers now, so I just want to say welcome to you, and I will go into a little bit more detail this morning just to set out how we look at markets. Basically we had the situation where we saw these peaks last year. FTSE couldn't make progress above the 6,100 level. That's a form of minus development. Minus development is discussed in my book, The Way to Trade, which you should all have a copy of. Basically, that level becomes a reference point for sellers. We really just dithered around for the first few months of the year, or the first half of the year, in fact. A somewhat bigger range than we've seen this year so far, although that, of course, is now changing. We bought ETFs on FTSE and the VIX and I think DAX during this period, and then cashed in when it came down. I mean, the VIX was a particularly notable trade. We bought in the ETF when the VIX was below 20, and during that fall it went up to around, went above 40. In fact, the second half of the trade would close for 120% odd. So it worked quite well. I mean, these are strategic positions. We held the FTSE short positions, I think, for 8 or 9 months, and they came good in this decline. The VIX, we think, got in May, so we made that 120% gain in a sort of 3 or 4 month period. We're doing similar things now. We bought the VIX and we bought FTSE short ETFs now, so we're waiting for the market to crack. I mean, my view is that we've seen this A, B, C. I use Elliott terminology, Elliott wave theory. Again, that's discussed in The Way to Trade. And also there is actually a video clip on YouTube which explains this in more detail. If you have trouble tracking this down, then let me know and I'll dig the links up for you. So we've seen that ABC correction. We've then seen a very corrective formation here, ABC. So there's a case for a major peak there. In fact, that was a B wave, and this C wave has come in. So the question is that C wave over? Now on FTSE, there's a fairly good case it is over, in fact. Not quite so clear on the DAX, but we'll look at that in a minute. I mean, my stance is that we want to add to our positions. We're 50% short FTSE, and we're long ETF. Also, we're short ETFs. Well, we have a short ETF on the bond. We buy the ETF and the T-bond, that is, and we're also long gold. The gold trade has gone well right from the beginning. So to determine whether or not this move is important, let's have a look at the wave pattern since the high. Okay, the high came in at 5964. It was about 10 days ago or so, 10 sessions ago, I should say. 5964 there. We had an initial 5-wave decline. 1, 2, 3, 4, 5. And we had the market seeing minus development again above the 5,900, 5,920 level. Kept getting knocked back. And this is a sign of a peaking process here, where a market can't make progress above a certain level, then it's an indication that it's going to go down. Well, what doesn't go up must come down. Difficult to time these things. We've had about 4 weeks now this market doing this sort of action. In fact, the whole year I think has been pretty much similar. Anyway, we had the 5-wave decline there, which is a suggestion of a trend change. We then had an ABC, not a very clear one. We had another 5-wave decline, but again the 4th wave actually was very, very subnormal, so it didn't really necessarily count that way. Then a 2-wave, which looked pretty impulsive, and now finally we've got something a bit more interesting in this decline here. Let me just make that a bit clearer. These charts can get a bit muddled. That's 1. So that is probably a 2. Then a 1 and a 2. And now we've got this 3 coming in. Now the key thing is that this is an important turning point. Now what I look for to see is a 4th wave and then a 5th wave decline. And as we've got 1, 2 and 1, 2 here, then we might see another 4th and 5th as well, because there are 2 sets of 1, 1, 2s, if you see what I mean. Now if we see that, then it will suggest we have seen a major turning point and we want to increase position size. Having seen 5 waves down, we normally see a rally up. So we'll hopefully be given a nice rally in which to go short, add to our short positions. The market is not always obliging, one has to say, which is why I've designed systems like the extreme stop system. But basically, extreme stop is you simply put a stop in below an extreme, and then you're triggered into the move, which is very simple way of getting on board. It also keeps you safe if the move never happens. You don't trade, which is of course perfect. Let's go down. Let's go down a leg here. Here's the 10-minute chart. By the way, I'm happy to share the rules of extreme stop with big call subscribers. But you want the full details of the system and how it works, in a more detailed fashion. Then you need to sign up to the video course I'm currently producing. This is still available at quite a substantial discount, like 40%, while it's in the beta testing stage. Anyway, enough of that. If we look at this decline here, then there is a possible 5-wave form already. So it may be that we're now seeing the beginnings of a rally as a 4th wave. Now, if so, then around the 58 level is sort of important resistance point, 58.25, because the 4th wave on the way down is often an important resistance level. But the format, I mean, this is a little bit unsure at the moment. These things often are. But what we're waiting for is a completion of the pattern and the rally, and we'll go from there basically. If I see any good short-term opportunities along the way, then I always do give, mention these in my reports. Although of course the big call service is about the big move, so we don't give precise recommendations on shorter-term action. Well, that's FTSE, so it may well be the peak is now in, but let's have a look at the Dow now. On the Dow, the action, I mean, there is 5 waves down here, but it all gets a bit muddled here. Then we've got a fairly clear 1, 2. This is all like a 3. Not so clear, basically. Let's look at the longer-term pattern on the Dow. On the Dow, I've been tracking for some time this sort of rising wedge pattern, which has been with us now since end of November. I mean, it did reach an apex, as it were, and we had quite a clear sort of A, B, well, 1, 2, 3, 4, 5. It stagged on a bit further, but has never really never got away from the price control exercised by these trend lines. And now we've got this blip down. We can't totally rule out the case that we've actually seen a 1, 2. This is all a 3, and this could be a 4. That's the biggest alternative. I think my view is that these markets are going to have to fall back. There's just not enough growth. Eventually, the market will realize that growth is going to be stagnant for some considerable period of time. Once you take away the growth, the ratings just disappear, really, because all the ratings, all the PE ratios are based upon continuing growth. But if you're in a non-growth environment, then things change quite dramatically. This I discuss in my book, Financial Cataclysm Now, which is also available free if you like a copy. Just again, drop me an email. Let's look at the DAX. I think the DAX has a very similar pattern to the DAX. Okay, here's a daily chart of the DAX. So again, here we've got a very clear 5-wave decline. This is actually not the case on FTSE and the Dow. It is the case in many European markets, though. So you've got the 1, the 2, then you've got 1, 2, 3, down to there. Down to there. 3, 4, and 5. So then we've got the 4th wave coming in, then we've got a 5-part 5th wave. So we've got a clear 5-wave decline there. We've then got a very corrective A wave, this B wave again, and now this C wave. Now the thing with the C wave is it's not so clear on the DAX, because in the sense that there's a 1 and a 2, this could all be 3 here, this could be 4, allowing for a 5th wave. So we could see a false break above 7,000, and when I say a false break, it could take a few days. It might go above 7,000 by a fair margin, and that could be the peak. So we're looking for a major peak. It's either in, or it could come in a few weeks' time, or maybe later this year. But the ETFs are a good way of trading this, because they tend to, well, they will still be there. So once the markets start to fall, they will start to appreciate. And obviously the idea is to make money on them, which is what we did last year and what we tend to do this year. We'll now have a look at gold. Okay, on gold, gold's one of our best markets recently. We caught the breakout from the triangle when it was below 1,000, rode that for fairly well. ETFs again, I've been holding ETFs since then. Here we saw a peak. We saw a nice ABC decline, nice break below the support level here. We went long actually just a day after that, around 1560 via the ETF. We're still holding this. Looks to me like we've seen a 1, 2, 3, 4, Then we've got a 5-part fifth wave there, which is quite useful. And now we're seeing this correction. It's very sharp. I wasn't expecting something quite this dramatic. In fact, it does. There is some alarm bells are ringing in the sense that such a sharp decline could be impulsive. Nevertheless, we're still holding long for now. I'm looking for an ABC decline here before gold starts to motor up above 2,000. I mean, it's a pretty solid trading signal here. This ABC. I mean, you've got 5 waves down here for the C wave. It is a clear buy signal, and clearly it's done very well. I mean, one point perhaps worth making is that when you see a buy or a sell signal, you can never be quite sure how long it's going to go on for. But having seen this possible 5-wave form, and I say possible because the action in the middle is not so clear, 3, 4, 5, it suggests a trend is up, and this is just going to be a correction, although it is sharp. And now I'll have a look at pound euro. This is the daily chart of pound euro. We've got quite a nice 5-wave rally to there, ABC decline. We've got another impulsive move 1, ABC decline 2. Now this counts quite nicely. 1, 2, 1, 2, 3, 4, and 5. Now, one of the rules earlier is that the wave 4 decline, this counts as a wave 4 decline, and it's been difficult to keep making lows and rallying quite sharply, but it's now done the same thing again with the C wave down to here. But this is traced out 5 waves, so we could see a good buying opportunity in the next few days on pound euro. I'm not too concerned that the low of this 4 wave is actually above higher wave 1 there, so the higher wave 1 is there of the sequence. There are 3 sequences here, but there's 1, 2, 1, 2, and then this is 1, 2, and then the third as discussed. So I'm not too concerned this has gone below the higher wave 1, because the currencies do tend to back and fill a lot more than the equity markets, and these rules I think had to be a little bit flexible. But right now we're looking for another move up in some kind of 5th wave, and then a few more in fact. But I think 120, 125, 126 on the pound euro is quite obtainable. Okay, well now we look at the quite interesting triangle on pound dollar. This will be the last thing we look at in this. Okay, here's a chart of the pound dollar. We saw this substantial decline up from about the 2 level, and I count this as an ABC, but Bill actually looks at it as a 5. There's a 4 in here, which you can count as a 5, but I'm looking at it as ABC. We've now got a very interesting triangle, which has been with us for, well, it's now over 3 years. So quite a massive triangle. And the implication of the triangle is that we've got the A, B, C, D. The implication is that we're going to see a move up to about $1.65, so that suggests pound's strength against the dollar most this year, in fact. At that point, there's a major decision point. Now, using Elliott, we'd expect the fall, or the move from the triangle, to be in the same direction as the move into the triangle, i.e. big collapse. That would be quite a major setback for the pound. But market profile, which I also use, suggests a more pragmatic approach in the sense that once you see this sideways consolidation, the move can come in any direction. So if we see a breakout, we may not, of course, but if we see the pound break out about above 1.65, then it could suggest a major dollar crisis. And perhaps one might suggest that a country that has such huge deficits might well be overdue for a massive crisis. And that could, in fact, be the catalyst to bring markets down in a big way this year, which is what I'm expecting at some point in the next year or so. We're going to see equities fall back quite sharply, which is why we're positioning as we are, of course. Okay, that's somewhat longer than usual. I would say that these clips are only about 5 minutes. The phone call somewhat interrupted the session, so now it says 15 minutes, but I had to delete some of that. But I hope you found it interesting and useful. I'll be back with the opening report tomorrow morning at 10. We also issue special reports when appropriate, so obviously it looks like we might be increasing our short positions on FTSE, long positions on the VIX in the near future, so you could get special reports with SMS alerts at any time, really. Although I try and make it sociable hours, obviously. Anyway, thanks again. Have a great day, and I'll speak to you again soon. Bye for now.